I was just going to mention something's happening. There's an emerging issue in California. It is related to the fires, and it's kind of the other shoe that we thought would drop. And that is the ability to get insurance.
Ooh.
And I've spoken about this for several years because you could see this coming, the emerging issue around insurance. And of course, you've seen insurers pull out of California in big enough numbers that you had to be asleep at the switch not to realize that, insurers may completely pull out of the state. And that's sort of what's happened. They have made insurance so excruciatingly expensive that it's very hard to get fire insurance in the state of California. There's certain areas in which you can get it. But even Kim, who lives in an area that's not prone to fire, they consider her in an area that is high enough risk that they're not writing policies there, or they're increasing the price of those policies to the point that they're just unaffordable. Isn't that
Our
right, Kim? Yeah.
our insurance, our auto and homeowners insurance are bundled together with the same company, and it has doubled in the last year.
So this could be the beginning of the end for fire insurance in California. Politico writes that this firestorm could be the final straw breaking the insurance market in California. It's been teetering on the edge of insolvency for years. There are, as you know, there's the FAIR Plan, which is essentially a pool of those of us who couldn't get insurance from an independent company, a corporate entity any longer. And so the state has put together the insurance market. And these wind-driven wildfires and the multi-million-dollar homes that were devastated, I mean, that's important because when you're having to pay out those insurance checks, you're paying on homes that are $30, $40, $50 million. I mean, that's not an exaggeration. Up and down the Malibu coast, all those places that we showed you at the beginning of the show, those are insanely expensive properties. There's probably nothing in the Palisades, which has been devastated, that you can get for less than $2 million, and most everything is north of $3 million.
Well, let
So
me
when
tell
you're,
you that insurance losses from this more than 17,000 acre Palisades fire, the estimate is that it could reach about $10 billion. That is according to a preliminary estimate from JP Morgan Insurance. $10 billion.
yeah. And, Trump mentions it as well. In many circles, they're doubting whether insurance companies will even have enough money to pay for this catastrophe. He's just dumping all over California. But there is truth that this FAIR Plan, while the state is saying they'll be able to pay out, and again, that's the insurer of last resort. When you can't get insurance anywhere else, it's through the state. They say they will be able to pay it out. We are aware of misinformation, they say, being posted online regarding the FAIR Plan's ability to pay claims. It's too early to provide loss estimates as claims are just beginning to be submitted and processed. But they're assuring that there are mechanisms in place, including reinsurance, to cover claims. So, the insurance is reinsured. You know how that works. Another insurance entity covers. But California faces a double-barreled threat, notes Politico. Private insurers could continue to drop policies and decline to write new ones, as they've been increasingly doing since a series of severe fires beginning in 2017 with the Tubbs Fire in Northern California. And the FAIR Plan, which has been absorbing the shrinking private market, could run out of money to pay its claims. That would mean, that actually wouldn't mean going bankrupt. It would draw from primary insurers to recoup its costs under state law, but that would raise rates all across private policies and send rates skyrocketing across California, of course. State Farm dropped nearly 70% of its policies in the Pacific Palisades neighborhood last year, according to a state filing, more than any other zip code in the state. So this very area that was devastated, State Farm pulled out of 70% of those policyholders. It saw the neighborhood as risky. That forced more people onto the FAIR Plan, which was originally created in the 60s, and that was around the riots in Los Angeles. But there's more demand now because of the fire-prone regions of California.
And you need insurance if you have a mortgage. You can't have a mortgage without them having security that there's, if your home is lost, that they have some collateral on the loan. So, what does that mean for the real estate market in California and home sales? Will the only people that are able to buy here people that are able to pay cash for everything? Is the mortgage industry going to go, going to tank? And will people not want to live in California because they can't get insurance here?
The people who are self-insuring is what it's called, but it's what Kim's talking about, which means you buy your house for cash and you don't have any insurance because you're just going to cover whatever loss on your own. Those people exist, but they're a very small percentage because you have to be pretty wealthy to be able to do that. Most of us finance homes or finance a portion of the loan and a portion of the cost, and as a result, that loan is guaranteed by insurance in some way, as Kim has noted, and that's why the FAIR Plan exists. Because if you didn't have the FAIR Plan and you have all of these private companies pulling out of California, you would have an inability to sell homes. You couldn't finance them. So this is I think it's a tricky period, largely because of the loss involving those high price tag properties that I was just talking about in Malibu and Pacific Palisades and beyond. But those are, you don't have to go much beyond just to see the kind of weight that that's going to have on the FAIR Plan. You have almost no option in California as a legislator and a strategist for the future, but to continue the FAIR Plan and continue to prop up the FAIR Plan any way you can, because, as you said, Kim, if you don't, you lose real estate in California. You lose people's ability to buy. Now, California is an insanely popular place to live. I understand people are leaving, they're going to Austin, et cetera, as though Texas is some nirvana. They have their own problems. Florida, they have their own problems. And by the way, one of their problems is this very problem. People can't get insurance because of the hurricanes in Florida. So there will always be demand for California real estate, but the reconfiguration of insurance in California through the FAIR Plan and whatever participation of private industry there might be, or just what increase in rates there might be, that's going to be I think, an ongoing issue and challenge in the months ahead. Yep. And so we'll watch it. But as I say, it wasn't something that we didn't anticipate. We saw this coming. And now it's a contemporary concern, largely because of this loss. When all is said and done, it may be the greatest loss in the history of California. Hi, it's Mark, and I thought that was great. Hit the notification bell. You'll know whenever there's a new video being dropped, and please subscribe to our channel to help us save the universe.